Welcome to the Commercial Property Podcast. My name is Suzi Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.suzicarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode. Welcome back to the Commercial Property Podcast, and today we're talking about fears that new investors may have in investing in commercial property, which feel very, very real, but may not be actually in reality quite as real actually as they feel. And it's totally natural if you're looking at a new strategy or you're looking to expand your portfolio to feel fearful about kind of the risks, choosing the right kind of strategy, choosing the right type of property to invest in, whether you're going to be able to get tenants. And I'm going to take you through an overview of some of the most frequent fears that I see from investors and how I think that perhaps they don't actually reflect reality, and also how you can overcome some of those fears as well, because mindset plays such a massive part in investing, any types of investing. You only need to look at the markets, the stock market, when there's the stock markets are feeling jittery, shares will fall. If there's a fear about war, oil prices will rise. That's kind of initially that's artificial. Obviously, perhaps it definitely becomes a reality. But, as human beings, we are emotional beings. And half of the skill in investing actually is to get over your emotions and to have a very clear direction of travel, a very clear strategy that can help you move forwards. There's nothing wrong with feeling fearful. There's nothing wrong with doing checks and balances on a new strategy. In fact, you absolutely should. But I think that when it starts holding you back, is when it becomes a problem. So I'm going to take you through a few of the fears that I most frequently see, and then ways that I think that either you can overcome them or why perhaps they may not actually reflect reality. Because when you're on the outside of a strategy, when you're out and on the outside of something that you don't understand, it's very natural to feel fearful because you don't understand it as a strategy. So let's get going with, first of all, I think that there is a perception that commercial property is incredibly expensive. Now, of course, it can be. When I was in the corporate world, I was dealing with multi-billion pound portfolios. But obviously, you can buy commercial property for the same price as residential houses. So it doesn't have to be overly complicated. Now, price and yield definitely reflect an element of risk. So if you're buying at the lower end of the spectrum, you do definitely need to just do your checks and balances, make sure you understand where the risks might lie. Well, you have to do that with any type of property, obviously. But, is it cheap because the market doesn't really understand it and you've got greater knowledge? I've got so many clients doing this daily, really, where they're finding properties that have been on the market for a year, 18 months, or have been put in auction and have no bids because the bulk of the market doesn't understand how to make money from them. And yet they're actually getting all money out deals from those properties. They're getting massive reductions on asking price because vendors are, keen just to offload them. They've been sitting on them on the market for a very long time. And there can be all kinds of reasons why properties on the market for a long time. It could be that they're being badly marketed. It could be that they're on with the wrong agent. It could be that just there's a misunderstanding of strategies. And it could be that you have repurposing ideas that the market just can't see. So just because something's been sitting there a long time, see that as an opportunity, not a problem. Now, obviously, not all properties will work, but that will bring me on to a future point in terms of making sure you really understand your strategy so that you can get a competitive advantage. So properties don't have to be overly expensive. I've got clients buying commercial properties for 150,000, 250,000. 500,000, you can pay as much or as little as you want. But just for every single property you buy, just make sure you understand the risk versus the return. And we're going to go on to a few of those in a minute. Also, I think there's a perception that commercial property is very complicated. I think with residential, everybody lives in a house, or most people live in a house, and therefore there's a kind of an innate understanding of residential property. We live in it, we understand it, we know that if you want to add value, you're going to make the bathroom and the kitchen look better, you're going to redecorate, you might even want to extend. That's how you add value with commercial property. Now, obviously, there's more advanced strategies like serviced accommodation and HMOs, etc. But at its fundamental, we all understand residential. So that's why commercial can feel like a whole different world, because it's obviously dealing with businesses. It's dealing with commercial properties, not residential. And therefore, we're just not used to them. That's the fact. So if you've not been around commercial, you're just not used to dealing with them. And so obviously, one of the best ways to overcome that is just getting your eye into commercial, learn how to understand how to invest in them, and then make sure you go out and look at plenty of commercial properties. What we need to do is develop this muscle, which means that actually it just becomes normal to look at commercial. And many of my clients, especially my board clients, when I've worked with them for a little while, they're like, it's like I've got a completely different pair of spectacles on. It's like my eyes have been opened to a whole new world because I understand this stuff and I realize kind of how it works. So kind of having that whole new understanding can really kind of move you forwards in terms of understanding commercial, and then a learning of the strategies. And I'll talk about a few of the other fears in a minute, but a learning of the different strategies, how to approach commercial, things to maybe look at, things not to touch with a barge pole. It all is a really important stuff for kind of getting rid of that perception that commercial property is complicated, because it's actually, I think, and you may not feel this right now, but I think that it's actually easier in a lot of ways than residential if you have the right strategy. And that's a really, really important caveat, because if you don't, it can be very, very complicated. It can be difficult. You can not do lettings in a speedy way because you've bought the wrong type of property. So there is a skill in kind of investing and learning how to invest. And so that's the important skill to have. And that kind of brings me on neatly to the next point, is that, what do I invest in? I think there's a bit of overwhelm about what the heck do I invest in? If you think about it, every commercial property, that there's as many commercial properties as there are almost businesses in the UK. I know there's a lot of online businesses these days, but if you think about bricks and mortar business, they're all slightly different. They all need slightly different types of properties, and therefore there's so many different types of commercial property to choose from, which is a great thing because we have choice of strategy. It's a bad thing because it can create overwhelm. And that is why when I first start working with my clients, we stop. We don't go out and just immediately look at deals. The very first session on the board, for example, we start with the end in mind. We look at where everybody wants to get to and work out a strategy that works for them, not just a generic strategy that kind of works in the market, something that's going to work for them, their lifestyle and their hopes and dreams, aims and objectives. That's a really important start. And then once you've worked that out, you are then looking at whether different types of property, different types of investing location work for you. And again, that's a process. It can be a very quick process. You can get in your own way with that process. I've seen that plenty of times. But ultimately, once you've kind of got over that hump, you could just go out and find deals. That's the truth of it. Once you understand understand that. And so that's why I talk about niching a lot. Niching is so important because You can scattergun invest in commercial, but the problem is there are so many different types of commercial strategies, so many different types of properties, and so many different investing locations that it's very difficult every time you see a property to start to understand supply and demand in that market, understand kind of what tenants are looking for, understand rents, understand yields, get to know the local agents. That is hard work. You don't want to be doing that every time. What you really want to be doing is finding investing markets where you know there's a niche that works, there's a strategy that works, and you build relationships in that. Now you can have more than one niche, obviously, because there's less commercial properties come on the market than residential. So I'm not saying just stick to one investing niche, but you can apply strategies across lots of different locations. I wouldn't recommend having more than 3, at a very push, 4 investing niches. You really don't want to spread yourself too thin. So that really is the key to success in my eyes, is making sure that you niche your strategies, and you start with the end in mind. And there's no point doing a serviced office strategy if you want hands-off income, because a serviced office strategy is an operational business. So, in that case, what you want to be looking for is full repairing, insuring leases, if you want hands-off income, and therefore in which investing locations can you find those? What kind of types of property will you get those, and what kind of tenants will take full repairing, insuring leases, and then you can work back from there. So that's really, really important. And that definitely brings me on to leases. I think that there is, leases can feel really complicated if you haven't dealt with them before. One of the first things I do with clients is, I have a blueprint day, which is a whole day kind of immersion in commercial property. And we reread a lease because it's really not that intimidating. There's standard lease clauses that can be, every lease has. Some leases are a bit different. There's always a variety in leases, but there's always standard lease clauses like the parties, what the rent's going to be, the term of the lease, the user, what kind of uses are permitted, alienation, which means can it be sublet or assigned, etc., repairs, insurance, etc. So once you kind of read a few leases, you can really get to grips with it. But of course, this is where leverage comes in. This is where if you work with a great commercial lawyer, you work with a commercial surveyor or commercial surveyors, they can really help you with this stuff. You don't need to do this alone. And of course, I help my clients with leases as well. So, leases are really important because they govern the future value and the current and the future value of the property, and how easy it is to manage. So you need to make sure your lease is done properly, but it's not rocket science to start to understand commercial leases. And really, once if you get a standard lease put in place, you can roll that out across different tenancies with tweaks and with changes for those particular tenancies. So again, it doesn't have to be overcomplicated. I think one of the biggest fears in commercial is a fear of vacancies. Like, what if I buy a property that I just can't let because the value is so tied to whether it can be let, the rent you're getting paid, and also the type of lease you put in place. And that, is a really valid concern. But again, I go back to niching. What we're not going to be doing is buying properties in markets, A, that we don't understand, B, that have supply and demand, which is working against you. Because commercial property is basic economics. If there's a big supply of a type of property, so some of the secondary high streets we're seeing where there's loads of vacant retail properties, the likelihood is that a tenant will come along to those and say, well, I could pick from one of 12, 15, 20 properties, and therefore, I'm going to pick and choose. When I do actually land on a property, I'm going to negotiate hard on the rent, I'm going to negotiate hard on the lease terms, I'm probably going to have a lot of break clauses in my lease, short leases, have a lot of rent-free, lower rent, because they can. Supply, and that's how basic economics works, that's how supply and demand works. So to get your very best chance of success, of getting the very best lease and the very best tenant, you want to buy properties where you understand the niche, you've spoken to local stakeholders like agents, you've even spoken to local businesses. I just go into shops and talk to people. You know, I appreciate it's a bit more difficult when you're talking to people on industrial estates or in offices or whatever, but you can get a lot of intel from walking around, talking to people, finding out how things work. But yes, what we want to do is buy properties that we've done our due diligence on beforehand. You can pre-let in commercial property, which means that you can arrange a lease before you buy the property. And you want to really understand, you know, who's there to take that property. And even if the property is occupied, you want to make sure that you've got lots of different multiple exits. You know, multiple exits is so key with commercial, you know, 4 to 5 multiple exits. So for example, if you have a high street shop with uppers, then you've got an existing tenant in there. That's great, but let's test the demand. Who else would take that? If they left, would they take it for more rent? Would they take it for less rent? What kind of lease terms would they take? Would they want any rent-free periods, you know, incentives? What kind of covenant are you going to get? Are you going to get a local covenant? Or are you going to get a national tenant? Covenant just means the quality of the tenant, you know, how good they are, whether they're blue chip or whether they're kind of local SMEs. So you want to understand all that, you know, even if the property is occupied. And then, you know, if there's a separate access to the uppers, if anything ever happened to that tenant leaves and you want to relet the property, could you split it up and just let the ground floor unit and let the uppers separately? What commercial uses are there for the uppers? And then obviously as an ultimate long stop, could you do a conversion to residential if you wanted to or had to, either of just the uppers or the downstairs as well? So that just gives you comfort that you've got multiple exits covered off. And, you know, you must definitely check supply and demand before you buy. You know, and that is really important in the choice of your niche. So, for example, if you were to invest, as like I said, on a big secondary high street where there's loads of voids, unless you have a plan in terms of differentiating your unit, then that could be a problem, or you have other kind of uses that want to go in there. But, you know, if you bought on a very small high street, you know, in a relatively wealthy town, or even not a wealthy market town, where maybe people don't have a lot of cars, so people shop local, or it's very remote, you tend to find that there's very high occupancy in towns like that. So look at the number of letting boards, understand what kind of lease terms people are occupying on. And, you know, it sounds difficult, it sounds cumbersome, but actually this stuff is quite easy to find out. And, you know, you do tend to go through a process. You know, I've got clients on the board who spend a lot of time ruling niches out. And I kind of tell them that is all part of the process, you know, because if this stuff was easy, everyone would do it. But, you know, there is definitely a blueprint and a framework that you can follow in terms of kind of finding a niche and ruling other niches out. So it doesn't have to take a long time. Sometimes you can stumble on a niche that just works really well. I obviously work with a lot of clients all over the country, so I know what's working as well across the country, which is super useful. So don't be fearful of whether you can let a unit. Be fearful of not doing enough due diligence and, you know, not following the right process. If you don't do that, you could be setting yourself up for failure. But there are very simple ways of actually following the right process, finding niches that would mean that actually you don't need to be in a situation where you can't let the property. And, you know, make sure that when you're doing your numbers, you're always kind of factoring a downside in. You put some sensitivities on rents and yields, because that's just good business. That's just sensible investing. And you would do that with any type of investing, residential, bond markets, stocks and shares. You know, if you don't do that, then you're approaching investing the wrong way. So just make sure you've got some sensitivities on this stuff. And obviously tenant choice, you know, tenant risk is really important. And
this episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
There can be a fear around, oh gosh, what if my tenant goes under or, goes insolvent or disappears? Well, there's a few things on that. First of all, if a tenant doesn't pay a rent, as long as your lease is drafted properly, it's very easy to get commercial tenants out of properties. Now, obviously, it's not desirable. We don't want to go down that route. We want to work with tenants. That's the whole concept. But if they're persistently not paying their rent, then very often you can just get a statutory demand, get the bailiffs in there, and they can change the locks. So it's not like residential when you have to fight them through the courts. It's actually really, really quite straightforward, and you can get occupancy pretty quickly. But what we want to do is we want to avoid any of that nonsense happening. So doing your checks and balances on tenants before you let to them is really important, both if you're buying a property that's occupied, does it justify, people, the seller might think they're an amazing tenant, but have you actually done your checks and balances to check that out? Or if you're buying a vacant property and you're letting it, you need to do lots of checks on the tenant. So that's, landlord references, accounts, doing credit safe or Experian credit check or Dun & Bradstreet type credit check reports, talking to them, understanding their business model, looking at similar units they might have. And if you just can't get comfortable in terms of their covenant, in terms of their quality, then you need to put some checks and balances in place to protect you. Things like guarantors, things like personal guarantees, things like rent deposits. And obviously it's horses for courses as to what to choose, depending on the type of tenant. But, you can protect against this stuff. So, an SME tenant will very often, find their last penny to pay you the rent because they have a personal guarantee and, they're concerned about, their house being taken or whatever. So it's very, very important to make sure that you protect yourself up front. And so you're probably getting the theme that actually commercial property is highly strategic. It's you do the work up front. You want to make sure you do your tenant checks, property checks, due diligence on niche, working out it fits your investing objectives up front. Do this stuff up front, so that actually when you do invest, yes, you still need to do your due diligence, but it's actually becomes so much more straightforward. So I think it's very natural to feel fearful about investing, especially if it's a new strategy. Any type of investing you did, I would not recommend you just go into it without doing some due diligence. But the point is that there's a bit of knowledge, or a lot of knowledge ideally, can really help you overcome a lot of these fears. And then I think just one more I just want to highlight before I finish up, and that is fear of taking the first step. I think there is, your logical brain can say, well, I've done the training, I know what my niche is, I understand it. But sometimes just taking that step to do the first deal can feel massive, and that's just a mindset thing. And I think sometimes you just need to feel the fear and do it anyway with that. Obviously, what gives you comfort is making sure you've done your due diligence, you've done your checks and balances, you really understand the market. But equally, the best way of overcoming that is just taking the first step. If you've done everything you can, you protected the downside, you just need to move forward. And sometimes that's just something that you need to do. So it's very, very natural to feel these fears when you're investing in commercial property. But quite often, fear, some people say that the definition of fear is false expectations appearing real. And, I think it's more a lack of knowledge than it is actual fears. And sometimes you just need to move forwards, get the knowledge, because commercial is a great strategy. It can be very hands-off. You can get great tenants. You can have fantastic long-term income. And so, it's definitely worth getting over that hump to make sure that you can invest. So thanks for listening today, and I look forward to seeing you next time on the Commercial Property Podcast.